Hey there, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 15th of January 2026. My name's Mark Gardner. We had stocks drift lower overnight on tech and bank earnings weakness. But the big story really was, our old friend silver rocketed to $93 and settled up there an ounce and up around about 7% for the day, despite the fact that the COMEX exchange is making best efforts to increase margins and calm down this rally. It doesn't appear to be stopping anytime soon. Getting to stratospheric levels, really. We're up about 43% in silver in the last month alone. So, and we're bearing in mind up around about 175% last year. Where this rally stops, I'm not entirely sure. I sort of get the distinct feeling that, we're at 93. It's going to want to go hunting for 100, I would imagine. It just markets like those round numbers, so it'll be interesting to see what happens over the coming days. But we are getting towards the nosebleed section, really. I think in terms of this move, without any form of pullback. As you can see here, we had Broadcom headed lower, Nvidia headed lower overnight, Oracle as well. Tech was, I think tech's a little bit of heat's just coming out of it generally. This was a broadening rally overall. As you can see, the Mag 7 and the large cap stocks all took a hit, but there is actually quite a lot of green in the rest of the sectors. We had the Russell actually end up finishing higher on the night, whereas the Nasdaq finished down 1%, which is a complete opposite of what's been happening for, on 2 years now. Excuse me. Bank of America, Citigroup, and Wells Fargo were the banks that reported earnings overnight. Citigroup and Bank of America actually both beat on top and bottom lines. Despite that, they were both down 3 to 3.5%. Wells Fargo did miss in some metrics and finished down around about 5%. JP Morgan continued to head lower after being down 3.5% last night as well. A lot of this is around the concerns on the credit card rule of the cap 10% credit card rates. There's a fair bit of debate. I think the market generally was sort of dismissing it as one of Trump's, announcements that never comes true. And something he will likely taco on. But I think that day two of those concerns and how much those banking stocks have rallied in the last probably 2 or 3 months. I think price action sort of telling us that. Despite beating earnings, that we were already there. We were already priced there, and they're probably sitting at pretty expensive levels here at the moment. China actually restricted H200 chips imports from Nvidia, which is why Nvidia's down, which is really that'll hurt Broadcom and Nvidia. Rather ironic, given how much how much effort they've put into being able to export those chips, and that'd just be the Chinese sort of playing games a little bit with them. So crypto-related stocks headed higher. Coinbase, Riot Platforms, MicroStrategy surged alongside Bitcoin. But yeah, as you're seeing here, the Russell was up 0.7 overnight, and you can see the Nasdaq down 1%. The Nasdaq's now got a is neutral on the technicals. Nikkei just doing its own thing as per usual. And China's the China A50 had a positive day yesterday, but the technicals not looking madly positive. I think they're in the wrong spot there. The China A50's got the strong buys. It's the Hang Seng that has the strong sell on the hourly and the neutral on the daily. So the Aussie market was up another 0.25% overnight, and then we've got fairly strong technical signals across the board. The commodities really helping us here. and whereas I guess the banks have not sort of been helping us. Our tech sector's quite cheap, and the energy sector was helping yesterday. There was some news about Iran come over the wire very recently, like in the last 20 minutes to half an hour, that sent oil prices, well, it spiked lower, but it's down about 1.5% in oil prices in the aftermarket. So that may take a bit of a sting out of the out of the energy rally. But look, energy's been the most disappointing sector on the ASX for 2 years running now. I think investors will, with any promise of upside in the energy sector, I think you're going to start to see investors realise that there's probably some value around there, particularly when you've got the likes of Exxon hitting all-time highs. The likes of Woodside and Santos have been down in the dumps here in Australia for forever, basically. I think down 22 odd percent in 2024, and wasn't one of the better performing sectors last year either. Didn't really recover at all. So maybe there's possibly some opportunities in some of those. Coal actually jumped up a bit as well. It's up 3% for the week. Really solid performances from all these commodities. It probably doesn't look that way on the bar chart because silver's up 20%, and that's kind of skewing the ratio, the scale on the left axis there. But you've got the likes of copper up 4%, platinum up 6%, crude oil, despite being down 1.5, is up 7 for the week. Coal's up 3, lithium's up 6, uranium's up 6, even Bitcoin bouncing back. Obviously not necessarily the commodity space. And gold, gold's having a great week, up 1% overnight and up 4% for the week. But everything's dwarfed by silver here at the moment. Up 7.2 for the day, which is better than any of the others for the week, and up 19% for the week. I think, as I said today, we've been heavily long silver for quite some time. I think these are probably points where 20% in the week, fairly extraordinary. You would expect it to have somewhat of a breather. I think it'll probably get to 100, but whether it pulls back and gets there in a month's time or tomorrow, look, the way the silver market's behaving at this point in time, anyone who tells you that they know is lying, because it is pretty unprecedented sort of times. Really, it's only a rally like this has only happened twice in the last 50 odd years. So you kind of throw historicals or average ranges out the window, really. So the likes of BHM, ASL, ETP, MAG in the physical silver, those guys will be looking pretty good today. South 32 maybe as well. But I would probably say we're getting to a point where you want to be starting to trim some and take some off just in case, and exercise some prudent risk management on your positions. If it keeps going, who cares? You've still got some on, but if it pulls back, you can probably buy the dip and and try to trade the ebb and flow of that highly volatile market at the moment. So in terms of earnings, we will have TSMC during the day here today. We've got Goldman's, Morgan Stanley, BlackRock tonight in terms of earnings in the US. I would expect that there would have been a few people exiting some excess positions or taking some profits in those banks, given what's happened with Citi, Bank of America, Wells Fargo, and JP. I think really we switch to earnings next week, where we've got a few more outside of the banking sector. You've got your Netflix, Seagate, which is actually not American, but it is listed on the American exchange. Memory company will be pretty interesting. Intuitive Surgical, Johnson & Johnson, GE Aerospace, NextEra Energy will probably be fairly interesting. Intel as well, Procter & Gamble on the healthcare sector. Freeport McMoran will be one to watch as well. Copper stock, and that has a small risk of some heat being taken out of the copper rally for them, just because they had a massive closure of one of their biggest operations in Indonesia in the last sort of half year. So look, it could go either way there. if they're ahead of schedule or the market's priced it in already, we could see you could see it start to rocket up. If there's been too much forward growth put into this company because of the copper price, it could drag it back. We had a situation like this with Newmont about 18 months ago when it was around about the $40 to $50 mark, where operational difficulties were really holding the stock back. And now, look, Newmont traded 170 yesterday. So it's one of those things that, if you've got a 2-year time frame, sometimes those operational issues can be quite decent buying opportunities. You've just got to have a plan and stick to that plan and not get faked out in the noise. Today at 1:30 Sydney time, we have I'm going to be hosting the 2026 Market Outlook webinar. You can still register. Check the comments field on yesterday's or today's live broadcast, and we'll make sure that the link to register is in there. We are running out of spots, actually. There's only about 30 or 40 spots left. But even if you register and you miss out on a live spot, you can get the recording afterwards. But we're going to cover 5 key thematics. We're going to have some stock picks in all those key thematics as well. We'll obviously cover, a macro outlook, risks for 2026, and just, a general summary. I think this is one of the more important years to be doing the work at the start of the year, because as we've seen in the first 15 days, we've got a fairly loose policymaker in the White House, which is affecting global supply chains and affecting global economy. It's unfair, and we're potentially coming out to the end of those chip maker parts of the AI rally teetering out, and then flows having to go elsewhere. So it's certainly probably one of those years where it's pretty important to be on top of your game. If you want to know more, or you want to get Mosaic and free 1-month trial, get all of our recommendations, go to mpcmarkets.com.au/Mosaic. Super easy. You can grab a free trial without the recommendations and just get all our news content, podcasts and content. It's really simple, just your email and a phone number. Or if you want to sign up with a credit card, it's only around about $150 a month for the recommendations. You get your first month free, and you can cancel any time in that period and not be charged. So you won't be charged until it rolls over for a month. You can also follow us at MPC Markets on Spotify, YouTube, Apple Podcast, on Twitter, etc., and see our content and up-to-date feel on the market. And hope everyone has a great day. If you're an Ausbiz watcher, tune in to Ausbiz today. I'm on the call with Mark Moreland. We're going to cover some US stocks and some global stocks, among them Glencore, AstraZeneca, LMVH, Duolingo. That'll be fairly decent viewing as well. Have a great day, everyone. We'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.